Hello there, and welcome to this second in this series of getting back to basics, trading basics videos, and looking at the an overview of how to trade rather than getting into the nitty gritty, which is what we'll get into later on. So, as a quick recap, we're currently looking at trading strategy in the yin and the yang of profitable trading. If you remember, 50% of trading is about the strategy, what you trade, and the other 50% is about what I call the head stuff, getting your head in the right place to be able to follow through on that strategy, do what the strategy says, pull the trigger when it says to pull the trigger without any hesitation. So we're currently talking about the strategy part, and we'll look at head stuff later on. Quick recap again: three ways what you can make a profit in the market. You can win more often than you lose. So if you have 10 winning trades and one losing trade, then all things being equal and balancing out, then you should end up with a profit. Or you can win bigger than what you lose. So if you have two winning trades and you win $1,000 on each of those, so $2,000, and five losing trades and you lose only $100 on each of them, then you lost $500, so you net $1,500. So if you win bigger than what you lose, you can actually win fewer trades but still make a profit. Of course, the third option is the preferred option, and that is to do both: win more often than you lose and make each winning trade bigger than your losing trade, and that way you'll make obviously more profit. So with that said, I left you at the end of the last video looking at the trading triangle, and promised that we'd come back to that and explain exactly what that triangle is. So let's have a look at the three corners of this triangle, as I call them. And those corners are: at the top you've got stock selection or trade selection, on the bottom left hand side the trade entry, and on the bottom right hand side trade exit. And it's important to have this structure, I think, because there's so much information out there, and when you're learning anything new, and we're all learning all the time, don't get me wrong, there's no point where you can say you've learned all there is to learn. We're all eternal students. So while you're learning anything new, when you get any new information, it's important to have somewhere to file that information in your head to understand where that sits with your current knowledge. So if you understand that all trading or trading strategy, as we're talking about now, all information relating to strategy basically fits into one of these three corners. So if you come across a new piece of information, you can look at that and say, does that relate to trade selection or entry or exit? And you can file that in your mind accordingly. And it's having a structure like that, I've found, just makes the assimilation of new knowledge much easier. You can look at that new knowledge and say, that where does that fit in what I currently know, and is that going to be useful to me or not? And a lot of the time, let's face it, new knowledge isn't useful, and it's best to ignore that knowledge. It's not always the case that knowledge is a good thing. So, as I say, that's the structure, what I use, the trading triangle, and we'll go and look at each of the points of that triangle in a bit more detail and see exactly how they relate to profitable trading. So, up the top of the triangle, we've got pick the right trade. Now, this might sound obvious, but it's really worth understanding. What do I mean by picking the right trade? What I mean is, some trades are easy, and if you've ever traded, then you'll probably know what I mean. You'll look at a chart and it will just seem really easy, and you'll wish that every trade could be like that. And obviously some trades are not easy, and what we want to do is always try and pick the easy ones, or as often as possible pick the easy ones. Obviously it stands to reason that if we pick easier trades more often, then we should make more money and find it easier to make money and be less stressed. And being less stressed obviously takes care of some of the head stuff side of trading as well. It's much more easy to be disciplined when trading if you're finding your trading easy. So what do I mean by an easy trade? Well, here's an example of a stock from this was Monday the 8th of December, and this was Apple. You look on the left hand side, you can see that opened up and rose pretty smoothly from where was it, opened around the $96 area, and it went right up to around just a shade under $100, so $4 range. and pretty much in a nice smooth line. I mean, whatever trading method you use, whether you use trend lines or indicators or whatever, you can see that that will be a pretty easy trade compared to, for example, this one. This will be not such an easy trade. Again, same day, Monday, 8th of December, and this was Cisco. And you can see that, yeah, it opened up, but it went up very quickly and it came back down again very quickly. All of this within a range of about $1. And for the rest of the day, just carried on going up and down, chopping around, and basically going sideways, didn't it? When went a bit up towards the end of the day from about 2 o'clock to about 3. But compared to the previous chart, definitely not such an easy trade. So what we're trying to do when we pick easy trades is pick charts that look like the previous one, where we've got nice smooth moving charts where you can basically get in anywhere and get out and probably make a profit even if you muck up your entry and exit. You want as many things going for you as you can. So picking easy trades is the first step in being profitable. So how do we pick easy trades? Well, it's all about universes. Universes are a term for different collections of stuff what you can trade. For example, you could have a universe of futures, very popular. Lots of people like trading futures. Trouble is, there aren't that many of them what you can trade. You've got the Nasdaq, the FTSE 100, the Russell 2000, the S&P, the Euro stocks. I mean, there are a few of them around. The DAX of another popular one. But you can probably count on about 10 or so decent futures what you can trade every day. So that's a relatively small universe. Another universe, what's very popular, is Forex, foreign exchange currencies, and probably a slightly bigger universe than futures. You've got various different pairs of currencies what you can trade: euro against the dollar there, dollar against the yen, pound against the dollar, dollar against the Swiss franc. In fact, there are several hundred different pairings, but it's a bit like futures. Of the pairings that exist, only a certain number are realistically tradable because they're the ones what have got the volume going through. They're the ones that most people are trading, and so you could probably count on 10, maybe 20 at a push, decent currency pairs what you could lump into the Forex universe. So maybe I've been a bit disingenuous there, making that the same size as my little futures universe to the left, but on the whole, a relatively small universe. Of course, as you probably know, the universe what I prefer to trade is a universe of stocks, which is gigantic, and there's just a tiny selection in that diagram there. But the stock universe, realistically, if we look just at American stocks, which is what I trade, there's around 10,000 different stocks. Now, not all of those are going to be tradable. A lot of them don't do anything. They're too cheap, too expensive, don't move, don't have enough volatility in them. But if we cut out all of those and filter it down to a decent selection of stocks what are realistically tradable and have the volume to allow us to trade in the kind of size that we want, then there's probably around 2,000 good tradable stocks in that universe. Now, if we look at go back to Forex and say there are about 20 Forex pairs, then you can see that it's a numbers game. The more tradable instruments that you have in your universe, the bigger the chance you have of finding trades that are easy, that look like that nice Apple chart, that are nice and smooth, that give you the opportunity to get in and get out, and even if you do it badly, have a reasonable chance of making a profit. So here's an analogy. If you were playing lotto or bingo, which hand would you rather be playing? You could sit down with a set of 5 cards and hope that all your numbers come up. Or if you were sitting down with a bunch of 25 cards or 50 cards or 100 cards, then mathematically speaking, it's pretty obvious that you've got a bigger chance of winning. However, there is a problem with it.